Yes, the country faces a range of contending issues that could impact its economic outlook. While the government is implementing reforms to address these challenges and boost business and investment climate, persistent high inflationary pressure, weakened economic fundamentals, and fiscal constraints have continued to push back all these efforts. What is the outlook for inflation due for next Monday? And to discuss this, I'm being joined by a research analyst at Chapel Hill, Denham, Ms. Nabila Mohammed. It's good to see you, Nabila. Compliments of the season. Thank you for joining the program.
Happy New Year, Mr. Solu. Thank you for having me.
Yeah, great to really see you. Now, ahead of December figures, let's take it back a bit. In November, we had 28.20% from 27.33% in October. So we've had that range of this hike. You are the professional here. What really is the economics surrounding Nigeria's current inflationary trend?
Well, currently we know what we are experiencing. We know that our inflation is largely supply driven, largely cost push, and with an element of demand pull in it. So we do not expect that December figures will print lower than November figures, obviously. We're expecting something higher. We're expecting above another new peak, another new high, given that December was also a festive period and a lot of activities in terms of buying, price increases here and there, and still the legacy issues around, how difficult it is to do businesses, how difficult it is for businesses to remain profitable and sustain their margins. Translating to all these things, we'll definitely see that inflation numbers for December will peak higher above what we saw in November 2023.
That's scary. But if we look at what World Bank said recently, World Bank is saying that economic growth would improve. I think 3.3% is what they are saying. And they say it's likely that very soon inflation will start to decrease. But some of us say, this looks like a tall order. How soon? When are we getting to that point, Nabila?
So in our view, really our projection for economic growth for 2024 is positive and would be better in our view, better than 2023. And it's largely because of certain things that we have seen pan out. For starters, this year is not going to be like last year that we had some very significant policy reforms that sort of shaped our entire landscape. I'm talking about the removal of fuel subsidy. I'm also talking about the significant devaluation that we saw in Q2 2023. This year, we do not have such policies. And devoid of that, and when we see that the policies that they have removed start to bear fruit, we will definitely see an improvement, a pickup in business activities, because people will still continue to do business. They will still go back to their daily lifestyle of buying and selling, or just going about their businesses generally. Aside that, we also expect that some of the policy reforms around key sectors that drive the economy would also translate to positive growth for the overall economy. I'm speaking about sectors like telecoms, sectors like agri. We know last year that for agricultural sector, they sort of declared a state of emergency in the space in order to address prices of food and services, of goods, and also catering to the infrastructure in that space that will help boost the activity. Because prior to Q1 23, we saw that the agri sector, even though it has been growing at a very slow pace, it remained positive. It delivered positive growth up until Q1 23, when the cash crunch sort of had that space, and we saw it contract for the first time in over 10 years. So our agri sector is one sector that would like to really see policy transformations that would support growth in that space. Telecoms is also one that has consistently supported the services space. And we expect that with the growth in subscribers, with the transformation going on there, like the introduction of the 5G and other key transformational policies that are happening in that space, it will also improve economic activities. We also have oil refining. I mean, we are talking about the Dangote refinery as well as Port Harcourt refinery that they are trying to bring on board and make it more active. All these things are like light at the end of the tunnel with regards to our economic growth, generally speaking. So our view in-house really is largely in line with the 3.3%. We are even expecting that if these policies are followed through to the latter, we will definitely see that happen. And another issue that people might want to question or talk about is the fact that we still have rising inflation. That's very true. But when we have these policies put in place, infrastructural developments happen in such a way that businesses find it more easy to carry on their activities. And generally speaking, we have more employment, we have more businesses are able to function better because there is adequate power supply, there is everything that they need at least to do business. It will support the growth that we're talking about. And if we're looking at the fact that MPR is still high, cost of borrowing as well would sort of stifle businesses from having funds to improve economic activities. That's true. However, we expect that disinflation will start at least from H224. We still expect that in this immediate term, which is the Q1, will still be in a tight monetary policy regime, will still be experiencing high interest rates, which may not really translate to improved economic activities immediately. However, we are of the view that towards the second half of this year, would likely start to see disinflation, and when that happens steadily, we won't be surprised to see that the MPC, that's the Monetary Policy Committee, decides to hold on hiking interest rates.
Great stuff there from you. Let me go back and look at the use of policy rates to address this ugly trend. But it seems like you alluded to, we're just seeing increases in deposits and lending rates, and that is what is happening with regards to that. Some also say inflation is more of the supply side than the demand side, that is supply driven. You agree to that too. So when would we start to see most of government policies crystallize? Subsidy removal, everyone believes that we'll get to the point where we start to reap the fruit of our labor, if I'm agreed to use that term. But when do you think we'll get to that point where it starts to decrease one way or the other in 2024? Or you're not thinking it will happen?
So we think it will happen if we are referring to inflation or if we're referring to interest rates. We think it will happen. When it will happen, it will be determined by a number of factors. And I will start with saying that the first is really about how these policies are implemented. Now, policies around that support infrastructural development is very important because, as you rightly said, which I am also of the opinion of, is that our inflation is largely cost push. So the environment is not friendly enough in terms of doing businesses. Our manufacturers need adequate and sustained power supply that would continue to encourage them or help their businesses to produce goods and also render service. We also need infrastructure in the agri space. Agriculture is another part of the economy that it's bulk of the activities with regards to agriculture is up north, and we have insecurity that sort of dampens or stifles the activities in that space. So if these kinds of issues are addressed, we will see that our inflation reduces. I'm not trying to say that the demand leg isn't part of it, because we even did some analysis last year where we noticed that there was a very strong positive correlation between money in circulation as well as the CPI growth. So there is also that leg that also needs to be catered to, and which is what I believe the MPC or the CBN governor talked about in his address last year when he mentioned some other orthodox means of managing the money in circulation, having a committee that will also be trying to check and be sure that there is an optimum level of money supply in the system. So all these factors, I feel, if they are implemented to the latter, we would definitely start to see disinflation. Are we going to see it in Q1? In my view, I do not think so, because we still have a lot of other factors that needs to be considered and needs to be put in place before we start to see or reap the benefits. Some emerging markets have even started to see disinflation. They've even been emboldened to even cut interest rates. Will Nigeria get there? I am positive that we will get there. We'll get to that point, but it will not be immediately. It will be from, of course, the second half of the year, in my view. And it is largely because of some of the things that I have mentioned around how they are supposed to make sure that policies that they have started are fully implemented. And it is not entirely the responsibility of the Monetary Policy Committee. There's little they can do. There's also the fact that the fiscal authorities would have to play their own part in terms of ensuring that all the other structural issues are addressed, and not just hiking interest rates, because hiking interest rates is largely a way of addressing a demand kind of pull inflation, and not necessarily the supply. The supply is really what the fiscal authorities will have to focus on, will have to channel their energy and channel their funds to. I mean, if we've removed fuel subsidy, the monies that are coming in or have been saved from that should be channeled towards infrastructural development to ease the way businesses do their business, and support them in such a way that they are encouraged to, or they are encouraged to really supply goods and services and manufacture goods and services and improve economic activities, generally speaking. Hi, Mr. Tolu, is still there?
Can you hear me?
I can hear you now.
All right then. So we have a spending plan now signed into law by President Bola Ahmed Tinubu. That's our budget. And everyone expects proper implementation of that document so that we can, of course, get the positives of it. Now, my question really would be the assumptions around that document, that inflation would also drop. Crude oil price will be at a particular rate. Well, we see all the fights for to address crude oil theft and all of that. But what do you make of that, and how realistic to you is that document?
I would start by saying that the budget for 2024 is very optimistic. And is it doable? Well, it is when they decide to, if they actually, stick to the plan and are transparent about it and are very detailed in terms of ensuring they meet those things, they meet those set guidelines to the latter. So in terms of assumptions, well, crude oil price right now is around $79 per barrel, and it is something that is within the assumption of the budget. For the exchange rate, we are still seeing volatility in that space, and it is largely because we have not started to see supply into the FX market. We all know that the long-term resolution to our FX volatility is largely going to stem from improving export earnings, or just having more FX flows into the country that will bolster FX reserves, and the country will be able to support or defend its currency adequately. But in the short term, we have, of course, started to see some inflows like the ones that were released just at the end of last year, as well as last week. That's the first week of January. And we have seen our reserves sort of go up, but we have not yet seen supply in the FX market, which is why we still see that volatility. So for that assumption of 800, it is something that there's still some months to the end of this year for us to really see that would materialize. But we'll expect that in the short term, they should improve FX supplies and start to put structures in place that would address it in the long term. With regards to our crude oil production, as at the end of last year, we're somewhat around, excluding, of course, condensates, we're somewhat around 1.25 million barrels per day. In all, we are around 1.5 million barrels per day. So can we do 1.78, which is the assumption of the budget? We can. I mean, if we're looking at pre-COVID levels, we were able to do something even way above that. We're doing above 2 million barrels per day during COVID. why can't we right now, if all the issues around crude oil theft and vandalism are addressed, we'll definitely see that the 1.5 in all which we are producing currently would be ramped up to the level that it is estimated or assumed would be in 2024. So I feel like if everything that we have heard from the government actually materialize, we don't expect that it is something that is going to happen with a snap of a finger. It will take some time, but then structures should be put in place. That's the beginning, that's the starting. We have a plan. This is the plan. So start to put that plan in motion is what we want to see, because we want something that would be long term and not something that is a quick fix and we are now back to to square one again and we're asking what should we do next. We should have those structures in place, and the budget is very optimistic. We like it. Is I mean, they say if you want to, it's not a bad thing for you to put your have your expectations set so high. At least it's supposed to fire you up to into achieving it. So if they are putting that bar, raising the bar so high like that, would expect them to start to put structures in place right now, because for something to happen, for a positive thing to happen much later, we want to see that there is a foundation, a very solid foundation for that to sustain in the future.
Mm. So interesting. Well, before I let you go now, I know it's a Friday. Before I let you go, we've not had an MPC meeting in a while, though the CBN governor justified it. The bankers' dinner last December, saying that they had some statutory numbers which they had concluded with, that was for 2023. What are you expecting anytime we'll have an MPC meeting? What do you think would top discussions around that table? And what's your reaction so far with some of the interventions by the Mr. Cardoso-led central bank?
So I think that when they have an MPC meeting, inflation will still be a topical thing that they will be discussing at the meeting, and how they would address it. They would likely look at, aside hiking interest rates, which I do not entirely rule out because it's a possibility given the persistent rise in inflation. Aside that, we also expect that they will continue to use other means in order to reduce excess liquidity in the system. I mean, even just I think on Tuesday or so, we saw that there was an OMO auction as well. And it's like an instrument that they also use in terms of mopping excess liquidity. We've also seen that they have done CRR debits recently this week. So I expect that at the meeting, they will discuss everything that has to do with addressing inflation, whether it's by hiking interest rates or by using other orthodox methods of mopping excess liquidity in the system. But inflation definitely will be a topical issue. Another issue they will be discussing, of course, will definitely be centered around foreign exchange and how to reduce the volatility in that space. So those are my expectations for the meeting, and I do not rule out a possible hike in MPR.
I must thank you so much, Nabila Mohammed. She's a research analyst with Chapel Hill, Denham. Thank you so much. It's really good to see you.
Thank you so much, and enjoy your weekend.
All right, you too.